Hello everybody, Brian here. Today is May 12th. It is approximately 7 p.m. Eastern Time. So I'm going to talk about what's been going on in the markets. I just put up a video here entitled Tether depeg from the US dollar to lose parity. Now, this is a big deal. It's an $83 billion crypto asset, probably the most popular out there. If this pops, the whole industry of crypto is dead, and pretty well everyone's going to lose a lot of money. So take heed in what I'm saying, and especially watch this video as well. Tether depeg from the US dollar to lose parity. Very important if you want to retain your wealth. Speaking of, watch this video, quantlabs.net/banking. Get on their email list, preserve your wealth now as calamities are kicking in high gear. Next up, as I said, we've got a new warning. Now, for me to put this out there, it's pretty interesting how my views have changed very radically over the last 2 weeks. I mentioned this in my last webinar, private webinar. Well, it was public, but now private webinar, speaking of how the exchanges are working against you, and a variety of other things. So if you don't take heed on this, as I said, it's not my money, it's your money. You lose, don't go crying to whoever. You got to take responsibility for your choices. So here's the article. Bitcoinist.com, SEC chair warning crypto exchanges working against users' interest. I've been saying that for very many months now. The only exchange I'll tell you right now in a nutshell that will pretty well work in your favor is Kraken. Their customer support is excellent. We've talked about yesterday, Coibase could go bankrupt and you could lose your entire account, and your money is not your money that's left in the account. So this is going to continue on that thought, as well as this Tether as well. So getting into this, Chairman of the U.S. Security and Exchange Commission, SEC, Gary Gensler, reiterates his criticism of blockchain industry, saying few crypto exchanges may be working against the user's interest as they bypass imposed rules to bet against their customers. Very true. Furthermore, notified that most of this circulating digital assets do not comply with SEC requirements and need to be registered with the security watchdog. Now, this is for the U.S. For whatever happens in the rest of the world, it don't matter. I would say, from what I'm seeing of potential customers that I've got, I would say 2/3, maybe 75% are from the U.S. I've been saying this for the last couple of months now, and I've always been against regulation. But with the way the world is just basically being turned upside down, regulation is now being kind of like your friend. When you have the SEC and the CFTC, 2-3 weeks ago, mentioning that they will merge together to go against making each and every out of the 1,000+ coins to be registered with either the SEC or CFTC, they will no longer be available in the U.S. Ontario kind of led the way there, and that's for your own protection. And I'm not here to say that's a good thing. Well, actually it is a good thing. I used to be against it, but buyer beware. Okay? And I wouldn't recommend, it's hard for me to say go decentral versus central. As I said, the only exchange right now I trust is Kraken, because as I said in a previous video, they're the only exchange out there that has something called proof of reserve. Look it up, where if they go out bankrupt for whatever reason, they have enough money to cover all of their customer accounts. They've been audited, I think it was last year. They're the only exchange in the world that offers that. They're the only exchange right now that has routing numbers from the Federal Reserve, meaning they're like a bank based out of Wyoming. Now, as he urged multiple times before, Gensler points out to extend compliance rules for better transparency in this manner. Notably, he was intrigued by the industry last year and aimed to assure maximum protection for users purchasing Bitcoin or any of the altcoins. In a recent interview, he highlighted that crypto exchanges do not feature security measures required to protect users at full, mainly from their perspective of market making and custody. I agree with that 100%. As an example, Binance, most of their available funding is either through their own currency of BNB or BUSD or Tether. Now we're going to talk about Tether further, but remember that video I just mentioned here. Tether depeg from US dollar to lose parity. It lost up to 5%. So that's a first warning sign right there. But you know what's happened already to the UST and the Luna or Terra Foundation. Goodbye. Okay. So the chair discussed commingling. The service does not guarantee actions are performed in users' interest. Again, when I hear that and read that, Binance, the first one that comes to mind. Coinbase is number 2. We already posted yesterday that Coinbase could go bankrupt. Crypto's got a lot of challenges. Platforms trading ahead of their customers. In fact, they're trading against the customers often because they're market making against their customers. Just like a corrupt Forex. I've always known that for a good couple of months now as these exchanges get more desperate. So here we go. SEC is doubling down its enforcement in exchanges. He expressed that most of the exchanges are in the range of SEC. Given that crypto companies offering investment opportunities of digital assets should register with a commission as officials plan to regulate crypto with a comprehensive set of rules in the future. While speaking about the misuse of stablecoins, Gensler mainly pointed out that the top 3 stable currencies, including Tether USDC and Binance USD, neglecting the regulatory obligation to know your customer and anti-money laundering. Stated, I don't think there's a coincidence. Each of these 3 big ones were founded by the trading platforms to facilitate trading on those platforms and potentially avoid AML and KYC. Tether, or USDC, is one of the biggest at $83 billion market value. I've already mentioned what could happen there and what's happened in the last 24 hours. Introduced makers of Bitfinex crypto exchange. Similarly, USDC were introduced by a consortium of several companies including Coibase Exchange, and Binance USD has ties with the world's largest crypto exchange by volume, Binance, with more than 17 billion market cap. Let me stop you right there. I want to make sure people understand when it comes to Kraken, I only trade and hold in US dollar, okay? So I'm not trading in any stable coin like Tether I used to do on in Binance. The glory days of that are done. We have to be safe, so I trade in US dollar. Right now, I don't feel safe even with Kraken. I'll tell you what I'll do in the next couple of paragraphs. Okay, continuing along, response to general. Okay, so here's Binance CZ trying to, do his thing. Comments refers to a blog post. It assured exchanges stablecoin exchanges with strict guidelines and remaining transparency with the user community. That's a joke. While Bitfinex didn't respond immediately and Coinbase refused to say something. Ha! That says it right there with Coinbase. Earlier January, chairman suggested that crypto companies should face broad scrutiny at the hands of financial watchdogs. In addition, regulators should directly handle such crypto exchanges to ensure investors' protection. For me to support this, and it just boggles my mind because the distrust of companies like Binance and Coinbase are just like, it's not a good thing. So he said, I've asked staff to look at every way to get these platforms inside the investment protection remit. The trading platforms don't come into the regulated space. I'd be another year of the public being vulnerable. So there you go. Again, that's from Bitcoins. Okay, so again, I've talked about Kraken. Now, here's what I mentioned in my webinar a few weeks ago. The days of being on these retail exchanges are over, okay? Do not hold money on them. There's been warnings specifically when it comes to Coinbase. So what to do? Well, your best bet is, as said before a few months ago, if you want to be exposed to crypto, that's fine, but only really focus right now about 90%, because that's where the volume is either going to be Bitcoin or Ethereum. Either or. and maybe one of the other altcoins out there. Now, if you want to trade directly, what I would strongly recommend is to do either through futures or options, micros, namely, for both Bitcoin and Ethereum, and do it through the CMC. Why? Because it's regulated and your money will be protected, as it's been for the last 100 years or whatever it has been. So that's the way to do it. Now, if you want to get exposed through an equity, you can do it through Grayscale as well. I haven't heard any bad news coming out of Grayscale at all. They just want to get off the pink sheets and get into an actual real mainstream ETF, which they deserve to be. And from what I'm seeing, I fully trust what Grayscale is about as equivalent of a mutual fund. Their Bitcoin's over $20 billion, so it's not like full of nobodies. Now, the other thing is, when it comes to where to park your money, I think you got to be on a large exchange, retail exchange. Either if you're going to do just futures and options, be it with one of those type of exchanges, because they'll be protected with the CME regulation on top of them all the time. The other option you have, and they've been around since the late 80s, is interactive brokers. Not a big fan of the support. There's not much other places to go. And with interactive brokers, you can get exposed to Grayscale. On top of, you can still get access to the futures market and options market with the CME. Now, with the CME, interesting thing is that they will be adding alternative coins to the CME at some point, but they'll be going through the vetting process of the regulators to give you the real it's okay to do, as well as a lot of these other altcoins are just going to wither away and die because they're just getting killed off right now with the down pressure, and that down pressure I think will continue as time passes, and there's going to be very few coins left after all this capitulation, but it will be a good asset class. I don't know when things will recover. So let me talk about that. In terms of crypto investing, with my portfolio optimizer and the stock market, I'll probably go through this again another video, but just what I'll say right here is it's important to know that crypto is not in the guidance right now. A lot of people say get into crypto, invest in the crypto. Why would you put money into an asset class that's not performing, or even you're going to lose money? It's a waste. You're better off to put money into a money market. You get a little bit of return, even fixed income, a little bit of return. And when the guidance for crypto improves, which it will at some point, and start to outperform, then that's when you jump in. Right now, I think crypto's got a long way and a long shakeout to go through. I think we will continue to see crypto to go flat like it has been all year. And again, why tie up your capital in that where there's no performance? Makes no sense. So I'm going to do another trading basket in my next video. And usually right now, the performers that I did on Monday, it was 6. The annual return was over 300 and some odd %. 5 of them were commodities. 5 of them were currencies, as well as one was a commodity, and it was not oil and gold, as well as the currencies. They were not US dollar or euro. Those are at this point really trash to hold because of the debt levels that these governments have. And of course, there's going to be the idiots, the ones, especially the ones that never went to school and never took something called Economics 101. The debt is because of, the debt we have is because of, the excessive printing by central banks. We pay a price for that. It's called inflation. Nobody ever talks about that unless it's some Republican. Other than that, that's where the inflation comes from, nowhere else. Anyone else that doesn't know that is either highly uneducated, lying to you, but you could look up any Economics 101 book and they will tell you that real inflation is generated by high levels of interest, and we're going through the classic conditions of when you have printed too much money. But that's okay. So there are ways to get around it. We'll leave it at that. Anyways, thanks for watching. And importantly, if you want to continue watch this video, 2-hour video, show you how to retain or even build your wealth right now. And that's at quantlabs.net/banking. Thanks for watching. Have a good day.